It is interesting for us to know how we have fared in 2019. Okay, currently, we are still having a very sluggish growth. In fact, the Nigerian economy is bedeviled by quadruple problems. The first one is a growth problem. We are not growing as much as we want and as much as it's necessary in order to take care of the population growth rate that is above 3%. We also have an investment problem. We have an inflation problem as well. Even though that some members of government do not want to own it up, I think we have a debt problem, even though they say that what we have is not a debt problem, but a revenue problem. So that makes it the four problems that we have: growth, investment, inflation, and either revenue or debt, however you want to look at it. So in 2019, well, in the last quarter, the result shows that we've managed to achieve a growth of about 2%, which is suboptimal. Suboptimal because we are growing at a slower pace than other sub-Saharan African countries. The sub-Saharan African growth average is about 3.5%. Nigeria is has just managed to register 2% growth in the last quarter. For the best part of this year, we've been struggling with a growth rate that is below 2%. So that is too bad for an economy that is about 200 million people, and then a population that is growing at about 3.2% per annum. So meaning that we are not covering the population gap. So, but on a positive note, we've had sustained manufacturing optimism, because if you look at the leading indicator, which is the Purchasing Managers Index, which tracks the optimism of manufacturers, those who operate in the productive or real economic sectors, it shows that we've been above 50, which shows that they are optimistic about the prospects of the economy. If it is below 50, it is pessimism, which means the confidence isn't there. So given that we've maintained that level of optimism, so, well, we can smile a little bit. Okay, so inflation, okay, nudged downwards, but in the last quarter it started to increase because of the border controls that the government has embarked upon. Then we've seen so many flip-flops in terms of policy changes by the central bank. The most recent one is the restriction on OMO sales. No more only to financial institutions and foreign partners. So some people of the view that it's actually because government has found itself in a very precarious situation because CBN has borrowed quite a lot. We shouldn't forget that in order to defend the naira and shore up the foreign exchange, the foreign reserve, they've had to embark on several measures, Eurobond, and at the point during this inflation and the immediate aftermath of inflation, we had government instruments, the treasury bills, the bonds that were going for as much as 18%. Today, they are selling about 6%. So what it means is that the accumulated huge debts, which they are now trying to get themselves out of, because some of those debts are short-term instruments that are maturing and they have to pay. What implication does that have for the corporate sector? So it means that investable assets, fixed deposits, fixed income are no longer available as investment vehicles for corporates and individuals. So I think in a way, when you look at it, it could be good for the economy because it's redirecting assets to maybe more productive uses. We shouldn't also forget the fact that Nigeria is one of the most unproductive economies in Africa. Our total factor productivity is below the average for sub-Saharan Africa. So we are not producing, we are not very productive. And part of the reason why we are not productive is because of the infrastructure challenges that we have with transportation and power, essentially. So Nigeria is sub-energized. We do not have enough power. Despite all the rhetorics, despite all the borrowings and investment over the years, not any significant improvement has been recorded on that front. So that has become a huge drag on productivity. So where are we today? We have an economy that has managed to grow to get to 2% in the last data. We have PMI that is optimistic. We have inflation that has increased but has gone down if we're considering 2 years back from the during the recession period till now. So we have inflation that has notched downwards despite this temporary increase as a result of border closure, which I think, from my own point of view, is not a bad thing for the economy. Okay, so then given this, what is our investment situation? Our foreign reserve has depleted. Okay, depleted to about, from the high of 46 at a point to $42 billion at this moment. So some people are feeling that now that the CBN is having this challenge of paying for maturing bills, there may be the tendency to devalue the Naira next year. And then we have the recent news that the federal government, the president has sent a bill to the Senate seeking approval to borrow about $30 billion to fund infrastructure. Now, when that is done, it means that our debt to GDP ratio will climb to about 20%. Okay, what it means is that the total debt as at today is about $83 billion. So if you add the 30 billion, that will make it about $123 billion. And then for a GDP, that is about $527 billion. So that's, we're running at about 20% of debt. Is it a bad thing? Well, if you look at debt to GDP ratio, it isn't entirely bad because we haven't gotten up to 40. Because in some economies, you have a debt to GDP ratio that is above 100. China is out even 300. So it doesn't really tell us anything. Debt to GDP ratio isn't a useful indicator as far as I'm concerned. So what we have to be looking at is the revenue. Like I mentioned, that we have a revenue problem. What is the independent revenue available to service those debts? Do we have that? So again, we have this year, the government has mooted the idea of increasing the VAT, the value added tax. So we are looking at 7.5 or 7%. So if you look at the stylized theory, which is that if a tax, ad valorem sales tax, consumption tax or sales tax or whatever, is increased at a rate of T, then it has an impact on disposable income of T over 1 minus T. I don't think it's going to have a significant impact on disposable income, despite all the claims, because we need to work out the facts to know that. I said that we have a revenue problem, which you can see as a debt problem, because if you're borrowing and then we're not able to service the debt, then that becomes really tragic. So what I think will happen is if the government can intensify the effort in expanding the tax base, okay, increasing the people under the tax net, getting more people paying taxes and getting more corporates paying the right taxes, and then curbing the wave of tax evasions and all of that, and what they call it, tax planning by firms. So if firms can start to see tax as a form of social responsibility, maybe they will be incentivized to pay the right tax. So if that happens, I think a government revenue situation will improve. And if that improves, then there will not be the tension on the CBN, there will not be that pressure to devalue the exchange rates. So supposing that we have this scenario that people pay tax, revenue improves, of course oil price remains stable because we have the budget benchmark of $57 against 64 that it is today. So supposing that the oil price doesn't go below that, then there is nothing to worry about. So what is the outlook for oil looking like? Well, if you look at development in the Middle East, the shale production, I don't think it is a threat anymore because oil is pretty much below 70. So it is not commercially viable for the shale producers to hit the market. So except any unforeseen event happens, any shock, barring any shock, oil will remain stable for next year. So if government take from oil remains as stable as it has been and production remains as it has been, right now I don't think there is any significant threat to oil production. So if volume and price remain stable, Are we foreseeing any shock in the exchange rate? My answer is no. So we will not have that problem. Now, about the borrowing that the government is embarking on, I think there are better alternatives for government to procure the necessary infrastructure, the needed infrastructure for us. We need massive infrastructure ramp up in power, in roads, in rail, in education, social infrastructure generally, health. Okay, so we need to declare a state of emergency on infrastructure because it's a huge drag on productivity currently. And then if we are looking at future capacity to produce, we are not investing enough in education. Quality enhanced education is not happening in Nigeria. So if we are to compete or to future-proof our population, our human capital, then it is important that the government invests heavily in education and in health. And of course, in physical infrastructure, we need to build the roads, we need to build the bridges, we need to build the rails, and we have to expand the ports, not just concentrating in Lagos. So the other ports, the eastern ports, need to be made operational. Okay, so if we can do this, we can unlock the huge potential in this economy. But I don't think that government is better placed to be the champion of all of this. Their record, historical record, is not convincing. We know that over the years, government has spent so much, wasted so much resources on power, there is nothing to show for it. We are worse off. So in the 1980s, there were plans to ramp up our power to about 10,000 megawatts. Okay, but where are we today? We are still struggling. Anytime we get to 4,000 megawatts, we rejoice. Every time we are struggling between 2,000 and 3,000 megawatts. Now, that is unacceptable. So do we need investment in infrastructure? Definitely we do. But should government borrow? My take on that is there are so many private capital looking for safe investment havens. I think government has done some good things by improving the ease of doing business. We went up 37 places. That is no mean task. So my question is, why would a government that has done all of this to achieve such remarkable improvement in the ease of doing business, stepping back now to get into the business? The business of government is not business. The business of business is business. So let the businesses be the ones to drive infrastructure investment, not government. And borrowing is not an achievement, because right now, if we look around the world, you notice that there is sort of a liquidity glut. There is so much money everywhere. Okay, we've got interest rates at near zero level in the United States, and in some parts of Europe, in Japan, is actually sub-zero. So that tells you that there is just free money. There's no such thing as a free lunch, but there is cheap funds everywhere. And there are investors who are looking for safe havens to put their money. Okay, long-term infrastructure asset remains a very viable and attractive investment option for such investors. How do we attract them? I think the government, they've started a good work, which is in improving the ease of doing business. They needed to intensify that and consolidate it so that private investors would find Nigeria as the best destination in Africa. So if that can happen, then government doesn't need to borrow that money. So bring in the private sector, expand the space for private sector. Now, that is not to say that we do not have challenges with private sector investment. Yes, PPPs remain a viable option, but are they the best? Again, experience has shown, research has proved that it is a way of privatizing profit while socializing the cost. So on balance, it is not very beneficial to the citizenry, but we have options, no. So I think the government should expand the space for private sector investment in infrastructure and let the private sector drive infrastructure spending, not government borrowing. So that's been the major concern of so many people. So supposing that we have investment in infrastructure, it will unlock the potentials in this economy, which is very massive. And with that, productivity going up, with infrastructure provided, then employment, jobs will be created. That means unemployment will begin to go down. Now, we've also seen this specter of funds with several CBN legislation, CBN memos on banks to increase lending, lending to deposits ratio and all of that. So banks are now in a kind of a frenzy looking for where to put their money. Now, those previous investments, fixed instruments, are no longer available. So banks are now approaching their customers, asking them to come borrow money. I just hope that that doesn't trigger a frenzy for subprime lending, such that we'll be kind of facing a financial crisis. But assuming that that doesn't happen and there is an improvement, infrastructure is key. If infrastructure is improved and with these funds available, it means that people can get money, cheap funds from the banks and invest in the real sector. That will increase productivity. It will create the needed jobs. So, well, the CBN, give and take, they have not done too badly recently with some of the policies they have enacted. But again, nominal policies, that is money interest rates, can only affect the economy if there is the complementary investment in infrastructure. So infrastructure is key. So we have an infrastructure problem, the infrastructure gap that needs to be filled. I agree with the president that oil money alone cannot fund the infrastructure that we need in this economy. But we need to borrow, but I don't think it is government that should borrow that money. Let the private sector inherit the risk to provide infrastructure. Let the risk be given to the agent that is better positioned to bear the risk. So that is about the investment problem. Then the last one is inflation problem. Now, the inflation, well, when we have this kind of liquidity as we are having now, kind of liquidity glut, so you would definitely expect that inflation may go up sometime in the year. Okay, already is nudging upwards because of the border controls. I said earlier that that is a good thing. Yes, because it will now help people to really get the right incentive to invest in the economy rather than supporting suboptimal smuggling and importation of things that we don't necessarily need that much. So what is the specter for 2020? We have growth. On exchange rates, like I said, it depends. If we have stable revenue flows, okay, exchange rates will remain stable. Otherwise, there may be a problem. Tax with the minimum wage, the tax creates any serious problem for the average consumer. My own analysis says no. What else? Growth. We register growth of 3% at least in 2020. Why do I say that? Despite the infrastructure challenges, manufacturing optimism has remained high.